Hi everybody, it's Eric Templeton with the Merit Title with a quick summary of what happened in the real estate market last week. Week ended June 20th. New listings continued right around 200 listings for the week. We've averaged 205, so we're right where we've been, 20% off of last year. What's going under contract continues to be a big number, average 218, so we're 30% ahead of last year. Closed sales, we had our biggest week of the year. In fact, the biggest week since last year in the fall sometime. We've averaged 149, so we're about 20% off of last year during this time. But with what's going under contract, obviously the sales will follow eventually. Terminations steady at 45, 20% ahead of last year. And current inventory continues in that 2,100 range off of last year. Again, seems like most of these indicators are either up 20 or down 20. Inventory's 23% lower than last year. And our price reductions continue to come in at a quick clip, 30% ahead of last year for the week and 30% ahead for the 4-week average at 81. So some quick highlights, we'll go through these. This is newly under contract and sold. So you can see the week, the orange right there. Again, going all the way back to the 41st week or so of 2019 to get a number that big. Look down here, you can see we're starting to creep up our closed sales. But what's going under contract continues to outpace anything that we've seen in the last couple of years. And our inventory we talked about hovering in that 2,100 range. But when you look at what's actually available, so this is active and bumpable. I added a data label there. So it was 1,100 back in the beginning of May. So on May 2nd, it was 1,100. And on June 20th, it's 800. So we dropped 300, just pushing. While the inventory stays steady, we're pushing it into the under contract and pending. With the sales going up, absorption rate got a little spike. Inventory dropped down a little bit. And here you can see our price reductions continuing to grow, but we've had periods with larger price reductions. Usually we're kind of at the point in the summertime where price reductions would start to ramp up. We're just a little bit ahead of pace this year. And looking at the line graph here, of course, the gray bars here, this is what I'm considering the COVID time, same period of time in 2019 and 18. And I added a label up here to kind of show what's happened here. So while the contract is huge right now, we had some pent-up demand from buyers here. They stopped putting these under contract, understandably, in April and May, March, April, May, and then came roaring back. If you look at the average of that, 168 homes going under contract per week for this period of time. Last year it was 158 for the same period, this gray bar, or gray line, excuse me, and for 2018 it was 170. So we're a little bit more than last year, a little bit less than we were in 2018 when you take the average. So pent up demand, the demand was still there, buyers have jumped back in and they are scooping up those listings, but unfortunately they're scooping them up faster than they're coming on because sellers have the same initial instinct, which was to stop listing, stop going under contract. Buyers have come back, sellers are a little more hesitant, understandably. They're inviting people to come in their homes. So the listings have not gotten back to the levels that we would expect to see at this period of time. So that's it. Thanks for watching, and we will see you soon.